Happy New Year, everyone. Welcome to the show. Another day, another new live just for you. You're with me, your host, Olivia Higgins. Now we're waiting for some people to join us. But while we do that, here's a video crafted and created just for you. Enjoy. Once again, you're back on another show. We're live here from our Moomoo Singapore office. You're with me, your host, Olivia Higgins, and welcome. A great welcome to our Moomoo community users, but also those who are tuning in wherever you're coming in from. All over the world or in Singapore, we're here crafting this show just for you, okay? Before we begin, I'd like to remind you, as always, do not take anything as financial advice. Everything is about learning and also educating yourselves and being a part of the discussions. So with that, this show, we're giving some giveaways for points. So if you ask a question, you will be rewarded, but even more so, if your question actually gets picked by us, we will reward you with more points. Okay, so definitely type in those questions, anything you want about this topic, type it in, and we will get that question asked at the end, okay, of our live webinar. So really today, network in the community, ask your questions, and be a part of the two-way conversation. Let's hop right in, everyone. Today's topic, starting 2024 strong with Warrants 101. Today with me from Macquarie Commodities and Global Markets, let's welcome our guest speaker, Jamie Chung, who is the head of Singapore Warrants. Hi, Jamie. Welcome to the show.
Hello, everyone. Hi. Good to be
Hi.
here. I'm very excited to be on a Moomoo webinar for the very first time. So I hope you guys will have as much fun listening in as I am feeling about being here on the show.
Same here, Jamie. And of course, with the audience tuning in right now, for those of them who don't know you, and also just a quick introduction about yourself, and also the objective of today's topic, Warrants 101.
Right. So I've been in this Singapore warrants market business for about 16 years now. So I've pretty much braved through, Olivia, the ups and downs of the market alongside warrant investors. Now, through these 16 years, I've seen other warrant issuers come and go and exit from the Singapore market. But I, as well as Macquarie, remain here as your trusted warrant issuer since 2005 and hopefully for many more years to come. The objective of tonight really is to bring forth information about warrants, especially if you have never heard about it. And hopefully, is a stepping stone to you using warrants to make money in this year's market.
And I've been tracking the sentiment overall in the investment communities within Moomoo and also just in general, right? So even with our global audience members, they're just wondering, uncertainty is something they're feeling at the moment. And of course, as an investor an active investor tuning in right now, what can they do? What can they look forward to in terms of warrants as a complementing part of their strategy? Let's start with the basic question. What are warrants?
Great question, Olivia. Well, certainly, I think it's been a very eventful start to 2024. I think this week in particular has been highly volatile. Now, it is amidst volatility that, products such as warrants should be used to really fully capitalize on this volatility. It is during such times where, uncertainty prevails, that the volatility could potentially be turned into opportunity, especially if uncertainty, someone is not exactly clear about the longer term trend. Then during the short term, where they see that volatility prevailing, they can then capitalize on it via an instrument that is meant exactly for that, structured warrants. Now, what are warrants? There are two types of warrants, one a call and a put. Call warrants essentially give buyers a right to buy the underlying share or index on expiry date at a fixed price known as the strike price. They move in line with the underlying share or index that they follow, meaning if the underlying stock or index went up, so will the call warrants. Now, put warrants, on the other hand, give the buyers a right to sell the underlying share or index on expiry date at the strike price or level. They move in opposite directions with underlying, okay, and they will increase in price when underlying stock or index falls. So in summary, if one thinks a share or index is going up in the short term, they can buy a call warrant. Those who think that the market will head lower in the short term can buy a put warrant. Now, to slide 4, structured warrants are listed on the Singapore Exchange. And on the screen now, whilst their full name looks a bit intimidating perhaps to you, it mainly contains information such as underlying that they are tracking, whether they are a call or put, and their expiry date. However, instead of going through the full warrant name to locate a warrant, most people search for warrants based on the type, whether it's a call or put, and the price they are really prepared to pay via websites such as warrants.com.sg, that is our website, or the SGX website. The quickest way of identifying a warrant is actually via their unique 4-digit codes at the end of their name. That is the same code that you type into any brokerage platform such as Moomoo to execute on these warrants.
Absolutely. Now, the next question, thank you for really just answering that fundamental question for those who are new to warrants. Now, you mentioned also the practical aspects. Later on, everyone, I'll show you, but you have to stay till the end of the webinar to find out how you can apply it, okay? The next question, what is the difference then, Jamie, between a warrant and an option?
Okay, well, indeed, at this point, some of you might wonder, isn't what I've said about warrants so far very similar to options? Now, moving on to slide 6. Indeed, warrants are a form of option, also priced up by the same, Black-Scholes pricing model for options. However, there are some fundamental differences, as you see in slide 6. First, warrants have the presence of a bank such as Macquarie to issue warrants. So for those who are used to selling an option, you may wish to note that you can't do so via structured warrants. You can't just write a structured warrant and sell it. Okay, in fact, any naked short sell positions in warrants must be covered within the same day, or you will be subject to the buy market by the CDP. And because warrants are issued like a bank like Macquarie, Macquarie is also the designated market maker, providing continuous bid and offer quotes for investors. So you can easily enter and exit from the warrant position at any point in time before expiry. Whereas with the option market, you typically do not have a designated market maker providing that form of liquidity and continuous quotes in the options. Now at expiry, all warrants are cash settled. So whether it's a stock or index warrant, as long as they expire with value, they will be cash settled. If they expire worthless, that is because the underlying stock or index is finished below the strike price for the call warrants, for example. So same as options. However, you do not have to take delivery of the underlying and be subject to further losses, which is something you have to do with options, right? You take delivery of the shares at expiry at the strike price. This also then means that the maximum loss for warrants is capped at one's investment outlay, whilst options can provide unlimited loss due to margin requirements as well as the need of taking delivery of the shares.
Thank you for that. And of course, we have questions already related to the differences. So thank you for really outlining that. And also, for those of you who missed that part, you can watch a replay later on. I'll share more later, okay? My next question for you then on the strategy front, Jamie, you've got active investors here, but you also got new investors on here who are thinking about how they can implement this as part of their current strategy. So what trading strategy should one employ then when they're trading warrants specifically?
Well, Olivia, I think before we go on to what kind of trading strategy one
Mhm,
should employ, I think let's go back to why you would even want to
mhm,
consider a warrant. And why you should go on to be interested to find out about warrants, hear me go on about the product.
mhm,
Well, on slide 5, basically, if any of these different scenarios currently describe your investment situation, I think you might wish to consider warrants as your solution. I'll drill down to essentially 3 scenarios. One, you are low on investment capital or savings, but you have an extremely strong view of markets in the short term, especially given the volatility that we are witnessing already a month into 2024. Or number 2, you are keen to magnify your portfolio returns with an instrument that does not subject you to a margin call,
mhm,
such as options. If you're keen, you're very familiar with options, but you're not keen, on margin calls, then potentially warrants could be a solution because they are a form of options, right? They essentially do the same thing, but without margin call. The third scenario is you're holding onto a portfolio of shares that you're bullish on in the longer term, but see short-term market downside due to negative market sentiment, such as the sentiment that's prevailing in Chinese shares at the moment,
mhm,
and you wish to hedge against that move. If you are in one of these 3 scenarios, and you then think that, okay, I'm interested in looking at warrants and how they could potentially help me, we can then move on to talk about trading strategies. Now, we've ascertained that warrants are different from options, right? Even if they're a form of options. So that
mhm.
means that the option traders here tuning in who are familiar with the straddle, the butterfly, please note that these will not be relevant when you're trading warrants. Instead, the strategies with trading warrants are really quite vanilla. You use them to trade either direction that you think the market is going or the underlying is going. So, for example, in slide 7, this is an example of using a call warrant to enter the share or index at a key support level as your strategy. Basically, you think that the stock or share is at a key support level that you want to enter at. So, for example, back in November 2022, when the benchmark Hang Seng Index traded to its lowest level since 2009, so that was just off the global financial crisis. Now, in this case, in 2022, instead of buying or entering the Hang Seng futures at 14,637 on the margin account, you can instead buy a Hang Seng call warrant at 1.2 cents instead. And when you decided that the short-term maximum upside that the Hang Seng can go is, say around 18,000, you can then exit the warrant when the Hang Seng is at that level, and you would have made 700%, which is 30 times more than if you had bought the Hang Seng futures instead. So I'm using this example all the way into November 2022 because I think the current Hang Seng is at trading back to those levels, last seen, 15 months ago. So I guess this is a good example to bring up. Now, aside from key support levels, some people prefer to
Mhm.
get into a bullish and long position when key resistance levels are broken instead. So it's like a good example of this, instead of buying at a key support level, you want to buy when it's broken above a resistance level. Now that's an example of, I think, the Nikkei 225, which has currently broken out of the 33,800 resistance level that it had failed to breach all of 2023. Basically, in 2023, the Nikkei 225 was coming off whenever it was close to 33,800. Slide 9. In this case, when the Nikkei 225 futures traded above the 34,000 level on 10th of January this month, thereby giving investors a confirmation of a genuine breakout, you could have bought a call warrant over the Nikkei 225 at 7.9 cents. Now, if you're unsure in the long haul how much more the Nikkei could go, and you would like to then exit once it touches, say, either 35,000 or 36,000, you can likewise just simply exit from the Nikkei call warrant at the same underlying level. Now, that would have amounted to an 80% gain over 5 days. That is 16 times more than the 5% gain if compared to if you had bought the Nikkei 225 futures.
Mhm.
So apart from going long via call warrants, as we know, this market, potentially quite hard to stay long for a long while, as 2023 has taught us, then another strategy that you can switch to employing with warrants is to hedge the short-term downside risks. In slide 10, we show an example of using put warrants. I think investors are often caught off guard by very sharp, sudden sell downs. Often most sit and do nothing and simply watch their portfolio of shares get more negative. And I think a lot of us are guilty of that, right? We're just caught off guard. We don't do anything. However, there are some events that generally tend to precede short-term risks that stock may experience, though we can't call out every time we think the market's going to come down, but there are certain events such as geopolitical tensions, wars, a change in government regulation negatively impacting certain sectors of markets, macro data releases that happens every month, every week, sometimes interest rates announcements, or even earnings results that fall short of expectations. Now, these are short-term, negative jerks to stocks or markets. And I've provided here in this slide an example of the Chinese regulation stock announcement targeting the gaming sector in December 2023, just before Christmas. Now, in this example, if you were a shareholder of Tencent shares and having seen, breaking news reports or updates on that because you followed us on social media, whether it's Moomoo or Macquarie warrants, you could have considered buying a put warrant over Tencent at that point in time at just 3.9 cents Singapore cents. Now, if you're unsure on whether the regulation could change the very next day or within the day, you could have then exited at day end with a satisfactory 97% gain, which would have more than covered the 13% loss that you have seen on your portfolio of Tencent shares. You can then wait till the next day whether or not to re-enter or not, depending on the latest updates on these government regulations. And of course, now in hindsight, we know basically the very next day or 2 days later, China basically did a reverse on the announcement of the gaming regulation. And slide 11, finally, the selection of a suitable warrant to trade, I think, is one key to an effective warrant trading strategy. I would essentially narrow it down to 4 simple steps. 1, have a target entry and exit level on underlying. You do not have to hold a warrant until expiry. I think some people have the misconception that when you buy a warrant, because it's got an expiry date, you hold it all the way there. No, in fact, you should be exiting from the warrant once your target level and underlying level has been reached in the short term, as the examples I provided previously have shown, right? As long as it hits your target level, exit from it. Now, also set a holding period, as warrants are not like shares, they expire. So you can't hold on to them forever in hopes that they will finally make money, right? And also for the leverage that they provide, they do come at a cost known as time decay. So the longer you hold on to the warrant, in fact, the more time decay sets in. So know your maximum holding period before the time decay erodes the geared returns or the leverage returns that you see in the warrants. Now, number 3, the third step is to note the effective gearing on the warrant that you are selecting. As you have seen from my examples, different warrants magnify the returns of the underlying differently. Some 7 times more, some as much as 30 times. So the effective gearing levels, because they vary, are important because apart from telling you how much more they move relative to the underlying, they also help you ascertain how much money you should be investing into the warrant. Now, step 4, warrant spreads. Always buy a warrant that is on tight spreads. Sometimes I've got investors saying, oh, if you're on wide spreads, that means you don't want us to buy the warrant, which must mean that it's a good warrant. No, it doesn't work like that, okay? Always buy a warrant that's on tight spreads. To help you with step 1 in coming out with a target entry and exit level, slide 12, we frequently tie up with market experts to provide their short-term views on the market and in turn share them in our newsletter and social media channels. Slide 13, to determine your max holding period, we have a tool known as the Warrant Selector, which we invented in 2021, essentially to help investors narrow down to the warrant of choice by showing them the potential returns based on the underlying target price that they have, as well as the holding period. To use this tool, you simply need to increase the holding period by weeks to see how each warrant, starts generating lesser and lesser returns because of time decay, even if their view is right. And so once, the warrant is generating negative returns, even if your view is right, don't choose that warrant, especially if you have a longer holding period, right? And keep increasing it to know what the maximum holding period of that warrant is, especially that warrant that you're looking to pick. Now, slide 14, to estimate the holding period of the warrant by days instead of weeks, because the warrant selector tool only allows you to increase the holding period by weeks. You have another tool known as the calculator tool on our website, so that you know the maximum holding period by the estimated date rather than weeks. So it's clearer. Now, slide 15, please be aware that all warrants stop trading 4 business days before the expiry date. So your last chance to exit from a warrant is the 5th business day before the expiry date. On slide 16, there is the effective gearing level, which you use to estimate how much more the warrant will move in relation to the underlying, but it can also be used to estimate the investment amount. Remember, warrants magnify the moves in the underlying, right? So if you're holding a portfolio of, say, $100,000 worth of shares, please do not invest the full $100,000 in the put warrant to hedge this portfolio. No, because why? Remember, the warrants move more than underlying. So if you're investing the full $100,000 to hedge your portfolio, you will in fact end up over hedging the portfolio, right? Because the warrant will move anytime from 2 times more to 30 times more, right? So in fact, you should be looking at the effective gearing of the warrant, which you can easily find on our website, and then divide your portfolio of shares by that figure to come out with the investment amount. The lower investment amount, you can then in turn divide it by the warrant cost to find out how many units of the warrant you should be buying. On slide 17, to see if the warrant was trading on tight spreads, we have a tool known as the Live Matrix, the only unique tool that you can find in Singapore, which shows you exactly where a warrant is moving and priced alongside the underlying day track. So this tool is really to improve the transparency of the product. You simply have to look at this tool, look at the warrant price to see if they're indeed quoted on tight spreads. That is the minimum 0.1 cent bid offer spread that you should expect to see on the warrant. If they're larger than 0.3 cents, do avoid it. We widen spreads on the warrant so that investors do not buy the warrant, for various reasons, of course, that we can dive a little bit deeper into in a separate seminar, or if you had a question for me later on. And finally, to conclude, slide 18, please use the tools on our warrants website, warrants.com.sg, as part of your trading strategy. We have the trending warrants, meaning the warrants on the tightest spreads and highest liquidity, marked out for you with the fire logo to, ease the warrants selection process.
Absolutely. I mean, you covered the what, the why, and now the how. And thank you for that comprehensive explanation of also the steps that they can take, especially those who are new to warrants. Now, if you like this content, of course, Jamie mentioned it, if you want to do a follow-up and also a part 2 of this, type in yes. I want to see a yes in the comment section right now. I want to see whether you want to see a part 2 of this. Of course, we will go more in depth, but if you like content like this, be sure to give us a follow and subscribe, and you can watch a replay of Jamie's insights as well. Okay, I'll share more details at the end of this. Now, final question before we really round up our discussion and take the questions from the audience for the second half of the live show. Now, we covered the opportunities, the strategies, and also the fundamentals, but Jamie, what are some of the risks involved to trading such a product?
Yeah, Olivia, I think with every product, there will always be its benefits, but also its risks. So investors need to be fully aware of the risks involved before participating in the product. On slide 19, I've got the risks detailed. I think for one with warrants, for the leverage that one enjoys, the cost to pay is really time decay, which is the holding cost, right? Where the price of the warrant decreases with time. So this is a risk that investors should note. Not just with warrants, but every product. But with warrants, we have created the warrant selector tool and the warrant calculator tool to help investors manage the risk around time decay. The gearing effect that I've talked about and which one enjoys with warrants is great, but it's also a double-edged sword. So if your view is wrong and the warrant, falls, it will also fall in greater percentages relative to the underlying. And in the event that you hold it all the way to expiry and your view remains wrong, you could lose all your upfront capital. But hopefully that's limited because of the small capital outlay required by warrants, generally speaking. Ultimately, I think investors need to remember that warrants are suited for trading a short-term move or expected volatility in the stock or index in the coming days or weeks or months. So if you think that the market's not doing much, don't buy a warrant. At the same time, if you are wanting to hold on to the view for years, 6 months and more, also don't buy a warrant, because it is different from buying stocks, which you can hold on to forever, until they make money, and you just can't do that with warrants. And finally, I just want to let investors here know that it is absolutely in the warrant issuer's interest, in Macquarie's interest, that a warrant investor makes money. Because when you make money, you come back for the product, and we get more business, and it can be a win-win situation. Ultimately, I think that's what every issuer who sells a product wants. So please ask me any question at all to better understand the product, so that you can fully understand its pros as well as its cons, and hopefully use it in the year of 2024 to make lots of money and return in the market.
Of course. I mean, we're all ready for it, right, Jamie? So thank you so much for highlighting those points. Win-win situation. That's exactly what our investors like to hear. So thank you for that chat we had. Now, I do want to pick out the burning questions we have from the audience. Now, those of you who have those questions for Jamie, type it in right now. And if your question gets picked, you actually get more points wherever you're tuning in from, but specifically in app. Okay, we're referring to the points giveaway in app. So ask those questions right now, because we'll be back with Jamie very shortly. See you soon. Now, you've heard the analysis, you went through the fundamentals, you're here on Warrants 101 and how you can start off the year strong. Now, how can you apply what you've learned, and also just some more information about the promotions going on right now, and also how you can access that on the app, and as promised, how you can watch a replay of this. So if you have your phones with you, follow me, and we are going to go through it step by step together, okay? Really, really quickly before we go to the live Q&A. Now, if you have your phones with you, you open your app, okay? And you can see right here, I am at the page where it actually gives you all the information of the campaign period that we have right now. Of course, sponsored by Macquarie, and how you can trade warrants and get up to 400 cash coupon right here. All the information is here, so I'm not going to delve too much into it, okay? You just scroll down and you can see the types of warrants, everything that also Jamie covered before, and also the actual step-by-step guide, okay? So very quickly, for the first part of it, if you go to your page right here, you go to markets, you click on Singapore, and you click on warrants, okay? Really straightforward. That's all you have to do. You just have to go to markets, Singapore, warrants, and you'll have the list of warrants available right here. You do want to pay attention to the MB component, and we'll have more information on that page that I showed you just now. But if you are ready to actually subscribe to it, let's go for an example, right? You can actually just trade with the orange icon. You all know that. If you want to subscribe, trade on something, and if you're interested to know more, then you'll proceed with that on the bottom left-hand corner. Now, what's important here for warrants, okay? We do want you to educate yourselves, okay, before you engage in any new instruments for yourselves. So be sure to rewatch this particular live webinar and also Jamie's points, or you can also complete the courses under our Learn section to find out more about this particular product before you engaged in it, okay? So under the Learn page, under Discover, you can also see your learning progress and what you can learn in terms of courses to educate yourselves on warrants. Now, as promised, if you go to the Moo tab, you can see right here, we're live, right? So the first tab right here, and you can see, I'm tracking your questions, but you can see how, the particular learning points all come together in the app. we've got the courses for you. We've got the ways you can actually engage in the promotions and also the step-by-step guide for warrants, but also the live shows and the webinars for you so that you can also check for yourselves what you missed. Okay, so it's very simple. You just have to go to the Mood tab and live for more information on Jamie's points just now, and keep those questions coming. I see a lot of questions, so I'll pick some of the few favorites for Jamie for the second half very shortly. Okay, if you have any more questions about the app, type it in as well, and or you can also email our customer service team, and they're always onto it very, very quickly, especially for the product updates related to this particular instrument. So that's about it for the quick demo. Thanks for following through. Again, any more questions, type it in down below right now. Now we're off to the most exciting part of the live webinar, the Q&A. Let's invite Jamie back into the room.
Hello, I'm ready.
Welcome back, Jamie.
Thank you.
So we've got some questions from the audience members. Now, you talked about the differences, right, between options and warrants. Now, what would you say are the insights from Macquarie's perspective, if we have an active investor right here who is frequently on options, how then can they look at the strengths of warrants to really complement their strategy right now in the uncertain markets?
Right. So, thanks for the question. It was something I guess that Olivia had asked, about previously. And, if you want a reference, I guess we can go back to slide 6, where we really have painted the fundamental differences. Now, if you were option trader, obviously you're probably very used to strategies where you can look to make money even when the markets are not moving, right? You've got, your straddles and what have you. And just something to note that with warrants, you can only buy. So if you were bullish, you think the market was going higher, you would buy a call warrant. And if you were bearish, you don't short anything. You don't sell anything. You don't sell. You don't sell a warrant if you think markets were not doing anything, but rather you buy a put warrant. So with warrants, it's always buy and buy. Whereas I think with options, you do have the, I guess for lack of a better word, you have the option of buying and selling both. So, like I've said before, with warrants is really very plain vanilla, the strategy, whereby you use it to enter into a stock, or the market, or the index. It's a means to an end whereby you use it, to produce potentially leverage returns, especially if you were very clear that, or very certain that the market was going to move in a direction that was according to your view. Just again to reiterate, you don't use your option trading strategies. You go back to a plain vanilla strategy of either buying a call or a put when you are expecting volatility in the market, and when you think that there's no volatility, the market's not doing much. You really shouldn't be buying any or what, whether it's a call or put at all. So essentially that I would say is the thing to note for option trader. Of course, then I would say you probably might be able to sleep a little bit better with warrants, just because you're not going to get any margin calls if the market has moved outside of your expected range, or basically caught you off guard with like a big sell down or a big spike if you bought a put warrant, and instead it is traded based on an average cash account. So if you were wrong in a worst case scenario, you do lose everything that you put up in buying a warrant, but that is also at the same time limited to the small amount of capital you place up front. Because going back to the examples, you can see most of our warrants are priced anything between less than 1 cent to under 20 cents. Those are really the most popular warrants that are on tight spreads. So the amount of capital required from you is really quite little, similar to options, but not traded on margins. So if that was something important to you and an important factor in you switching out of options, then I suppose warrants is something that's worth considering for you. I hope that answers your question.
Yes, absolutely. Thank you so much. Now, the next question we have, I'm going to assume this is a new investor within this space. So how do I navigate the space if there's only that buy option for myself? So, how can I determine, whether or not to really go ahead and try to complement this with my current strategy?
Yeah, so again, going back to if you were an option trader and looking to switch out, it is different. But ultimately, it's similar in that you are looking to capitalize on short-term volatility in the market, which is why you're even wanting to action, on your investment side. But I think, for maybe traditional share holders or traders, how the warrants really complement your portfolio is in helping you either accentuate your the returns that you're looking at, right? Because you think that the short-term move could be really quite sharp, and you would, even if you're long, you like to magnify the returns of, either they would say double down, right, where you are wanting to magnify your exposure. You can do it via warrants, right, by going long on the calls, or if you're looking to hedge, then you go long on the put warrants. So it's not that you're limited, but I think warrants are really for you to use when there is volatility. So either to add to your exposure, to magnify your exposure typically via call warrant, or to hedge the exposure that you're currently sitting on via put. For some people, they are not shareholders because simply too expensive, to buy, for example, like a DBS share, it's $31 at least currently, right? And it's a lot of money, and you don't intend to set aside that money, to invest in the stock market. In which case, then you can then explore using a warrant to leverage and capitalize on that view. So you don't necessarily need to own a share in order to trade warrants to complement your strategy. But I think it is a good instrument to use, especially if you were sitting on very low investment capital and want to participate in the market anyway at a very low cost and at a limited loss. In this case, going long, either via call or put, will allow you to experience both, leverage returns and limited losses in the worst case scenario.
Thanks for that. Really comprehensive. Now, we talked about the risk, of course, at the end of it, but we do have a question here about, what if they don't have that capacity to lose, basically after they made that decision. I know you covered a little bit of this at the moment, but, we've got some young investors here as well. Do you think then they'll just have to try to decide on putting small amounts instead? What is the common strategy for a young new investor in this space?
Yeah, so indeed, I think, if you were currently a shareholder, for example, you are not having a lot of, capital or savings because it's already locked up in shares, whether US shares or local shares. Then, one of the things that, you can use warrants to decide on how much you should invest in is the effective gearing level. Again, something I've covered. We can probably go back to it. I think it is on slide 16. Yeah. So one way of ascertaining how much you should invest in really should, be to take account the effective gearing levels, right? Whereby you don't put up, just any random amount. But if you were meant to hedge that portfolio, then make sure you use the effective gearing level to help you compute your investment amount. But if you're simply, a young investor, you're not holding any shares, and you're mainly just wanting to participate in the market, like I've mentioned, as one of the reasons why you even consider a warrant, then I would say put up a small amount, or not at all, to observe how warrants work, in the real world. Track down a warrant that you are interested in the underlying that you are interested in, and really observe day on day, or use the tools I've mentioned, the selector tool, the calculator tool, or simply watch how they perform in the real world, and see, if you are confident enough to put up money. You can start small. It doesn't matter. And the beauty of starting small with warrants is, even if they're small, because of their ability to magnify your returns, or provide geared returns, it will eventually grow your small investment to hopefully a much larger amount that could be more than your investment amount, right? Because as you've seen, for example, a warrant can move 700% in a month. It can more than double your investment capital. So if you're worried, start small. I think it's a good way to start. And as you grow more confident, as long as the views in the market are aligning, sorry, I should say the sentiment of the market is aligning with your personal sentiment and view, and you feel more confident, you can always, I guess, buy in on more or invest more. That's the other thing you can look at. But also know that your loss is limited to how much you put in. So if you're not prepared to lose, the full $5,000 that you've put in, then don't put the full $5,000. But also, like I've said, with warrants, you can exit at any point in time. So, you don't have to wait for it to go to zero and say, I lost everything. If your cut loss was, 15%, below from where you expect the market to go, then cut loss, and you probably wouldn't lose the full amount. You still get back, you see some of your investment capital, even if the warrant has produced a geared loss.
Thank you for that. So we have some follow-up questions on the time decay risk, but I'm going to come back to that. Now, I do want to ask you something about Singapore. I mean, you are the head of Singapore Warrants. So, in terms of, the Singapore exchange, for example, right? What are some of the characteristics for the investor base in Singapore that are the strengths within the warrant space that they might want to consider? Let's maybe highlight maybe, 1 to 3 characteristics that, a Singapore investor might want to consider.
Well, I think for one, the warrants are all traded in Sing dollars, so you are not exposed to, I guess, foreign exchange, rates, so that you can convert your Singapore dollars into US dollar in order to trade the broad US market, whether it's S&P option or, a Nasdaq option, etc. You can just, your savings naturally, I think income is in Singapore dollars, and you use that Singapore dollar to invest in potentially a S&P or a Dow or a Nasdaq warrant, instead, without leaving the exchange. So I think that's the beauty of trading on the Singapore exchange, whereby you are not needing to convert whatever, your dominant, your mother currency into something else, and then have to consider what FX looks like and how that factors into your return. So that's one. And two, I think trading on the Singapore exchange with, your securities account, your cash account. Some people in other brokerages obviously trade on contra. In Moomoo, you trade on the cash account. That really means that, it's all about risk management. Your losses are contained to the amount that you placed up front. And you're not subject to margin requirements, margin top-ups. The max you can lose is what you place up front, nothing more. So that's the other good thing about trading a SGX listed warrant on the SGX exchange. And third, the exchange shuts at 5. So some of you, whether or not you're studying or you are needing to wake up early in the morning, you don't have to stay up late to watch what the markets are doing in the US or Europe. You go and have dinner, you go and have your after work activities, and set your cut loss levels, and the very next day, whatever the indices in the US have moved, that is all going to be factored in the very next morning when the market opens. And so your cut loss levels, put them in, and the very next morning when it opens, if you wanted to cut loss there, you can cut loss. So in short, I think the advantage is potentially you sleep better at night, and that you really limit your view to whatever that is trading from 9 a.m. to 5 p.m. During Singapore hours.
I mean, absolutely. I mean, I definitely can relate to that. And also the investors on there, we always have this running joke within the community, whatever helps us sleep best at night, right, would be the best investments for ourselves personally, on a personal level. Now, thank you, Jamie, for that. The next question, I'm going back to the time decay risk question. Now, someone would like to ask in terms of time frame, right, based on the time decay risk, what is the safe distance to cut the warrant for this personal investor right here?
I think the question I'm assuming is more what is maybe the safe holding period, right? When you are asking about distance. Well, I can't tell you offhand what the safe holding period is because they differ from warrant to warrant, right? Different warrants have got different expiry. So anything generally that's very short dated, it's going to expire in the next 2 weeks or shorter. Those are highly geared, comes with high risk and higher time decay. So I would say, those are probably the warrants that you generally want to avoid. And one way for Macquarie to communicate to you on warrants to avoid is by widening spreads, which is why I go back to, the four steps to selecting a warrant. And the fourth is to always look for a warrant on tight spreads, because when an issuer widens it, is for a reason. It's to tell you, be cautious, stay away from the warrant, look at the other warrants that we have. Well, I would say generally the average holding period, whilst I can't tell you offhand which is the best, but generally they're anything between, a day to anything to a month or two. And generally investors do stand a good chance to make geared returns, which are not eroded by time decay. Generally, the more the underlying moves in your favor, the more gearing you're going to enjoy, which means even time decay, as steep as it can be in a short dated warrant, is not going to erode into it. I'll give you an example. If you're trading a warrant that's going to expire in 2 weeks, but the very next day you bought today you bought into a call warrant, right, over an index, and then very next day the index jumps 5% or gaps up 5%. Well, you're still going to make a whole lot of, well, shouldn't say a whole lot of money, because compliance is not going to be happy with that, but you will make quite substantial geared returns in this warrant, even with sharp time decay. Why? Because the share price has moved in such a big magnitude in your favor that the geared returns has more than offset the time decay. Now, to know exactly what kind of time decay would set in based on your time period, please use the warrant selector tool or the calculator tool, as I've mentioned. If that was something that you're struggling to use, it's really quite simple to use, but if that was something you're struggling to use, we've got educational videos that touches on that, or I'm just a call away. We've got a toll-free hotline for any investor to call through or email through for us to take you through it. So I hope that answers your question. I can't give you a definite answer because it differs from warrants to warrants, but the answer will come in the form of the warrant selector tool and the warrant calculator tool.
Love that. And I also love how connected you are with your investors as well. And that's something we definitely share with Moomoo and yourselves in Macquarie, about really educating our investors, but at the same time being there for them and guiding them throughout the investment journey. Now, we've got some interest on the SGX now, of course. Now, could you just share a little bit, or just give us a summary on the insights of the actively traded index warrants listed in SGX? And maybe you can also highlight some examples of the performance of some of them. I mean, I think we don't have to go so specific here. Maybe you could just summarize in general for the SGX listed ones.
Right. So, well, the most popular warrants listed on the exchange are, I would say, even the most popular listed average products listed on the exchange are, in fact, Hang Seng warrants, okay, as well as Hang Seng tech warrants. And it's no surprise that in the last 16 years, those have consistently been the most popular warrants, just because of how volatile the market inherently is. The HSI index, for example, is as volatile as it gets, I think, especially relative to Singapore shares. So over the last 16 years, just remember, warrants are used to trade volatility. So the more volatile the underlying is, I guess, the more want from an investor to use the product. And so, yeah, no surprises that Hang Seng warrants have been the most popular, regularly, sitting on the top traded list, but also in terms of the top movers and losers. So as an example, yesterday, when the market was down 4%, this morning we ran a newsletter as well as on our social medias. You see the posts that put warrants garnered returns this week, or returns of anything between 84% to 120%. And that's over just a week, this week alone. Whereas over a day, I think overnight, with the market rebounded, of course, it ate into some of the losses, but yesterday alone, you would have made anything between, I think, 25% to 70% on the put warrants. And that's all information you can see on our website. So those are real life examples of how our most popular warrants have behaved. Obviously, those put warrants today are down because the market rebounded, I think, slightly, about 0.8%. But in this case, then the call warrants are up, of course, less, because the underlying is up less than it was down the day before. So the call warrants are seeing magnified returns of 25% and more. So again, you can see all of that on our website, but these are real life examples. And if you're interested, you can easily go to warrants.com.sg, open the homepage, and you immediately see the top gainers and losers of the stocks that we cover, as well as the warrants that we have. Some of the other popular names includes Hang Seng Tech, because that is also extremely volatile. Some of the Hong Kong names, such as Alibaba, Tencent, Meituan are very popular. In Singapore, the most popular name and warrant is DBS, because that's a stock that I think a lot of people are interested in and familiar with. But more importantly, it is a share that is quite expensive, $31, to $33 thereabouts. And so in order to own one share, it's a couple of $1,000s of dollars, and in the past, when on the exchange, the minimum trading size was, I think, 1,000. It was 30 over 1,000 in order to participate in the moves in DBS. But with warrants, you can enter whether via call or put at a cost as low as 1 cent. So it doesn't take a lot of your capital, and as such, naturally, I think investors gravitate towards such warrants, and so DBS warrants are amongst our most popular warrants as well.
Thank you for that. And if you want to track the real-time performance as well of the ones that Jamie highlighted, you can do so on the app I showed you just now. And if you missed it, it's okay. You can just go under Markets, Singapore Warrants, and you can look out for the particular ones that you want to track and trade. And it will just be right there for you. All the information you need, powered by technology and everything, all the summaries that Jamie mentioned as well. You can find that on the Macquarie websites, or you can also just track it on the real-time app for yourselves. Okay, so if you missed that, definitely watch a replay of this. Now, Jamie, we've got some final questions here. Someone would like to know, up till the expiry date of the warrant, what would you say are the limits of trading days that they can trade until? What's a safe amount of days?
Okay. Now, I think I covered this. I'm just trying to pull up the slide for you. I had a slide on the last trading day of a warrant, and that would be slide 15. So, look, the maximum date you can trade up to is really, the 5th business day before the expiry date. And again, it's not something you have to memorize. It's all public information available on our website. But of course, anytime in between, you're free to exit from the warrant, after buying it. What is the optimal holding period, or the maximum holding period? I think this is similar to question what I previously answered and which was asked before. But I would say we go back to where you think the market's going. No, if your view was that the Nikkei was going from 34,000 to 35,000, and you're not confident that the Nikkei could go above 35,000, then if you had bought a Nikkei call warrant, I would say exit from the Nikkei call warrant, because your entry and exit levels should be based on your underlying share view, not on the warrant, right? It's at the end of the day, there's not a lot to do with what's the maximum holding period I can hold onto the warrant. It is one of the factors, yes, but ultimately go back to step 1, which is what's your view on underlying. And if your view on the underlying has been reached, even if you were prepared to hold on to it for 20 days, right? You can exit from it 5 days, because 5 days was all it took for the underlying to reach your exit target level, right? So you can exit anytime within the maximum holding period that is in turn indicated by the selector tool or the calculator tool, which in turn requires your input on the target exit level. So we always go back to the fundamental. What is your target entry and exit? I think where it gets a bit tricky is this whole time you've got this exit level, but the market doesn't go in accordance to where you think it is, or according to the maximum holding period. Then that's when I think you need to decide, okay, do I cut loss here, or do I roll into another warrant with a longer expiry date so that I can prolong my holding period? And again, to make all these decisions, the information is available on our website. The tools are available, and the tool is known as the warrant selector, as well as the calculator tool.
Definitely make use of that, everyone tuning in. And thank you so much for your questions. That's all the time we have today, but we're still tracking your questions, okay? So still leave some comments down below. And if you want to see a part 2 of this in terms of going beyond the fundamentals and maybe a bit more in-depth on warrants, type in yes right now down here in the comments section, wherever you're tuning in from. And if you'd like to see Jamie as well to cover more in-depth analysis on this, okay? Thank you so much to the audience for your questions. Now, Jamie, before we leave them, what's your final takeaway, especially since this is just the second show of the new year?
Yeah, well, look, if I guess if this session wasn't sufficient for you on slide 20, we have created short educational clips. They are no more than 50 seconds long. So you can either scan the YouTube QR code or take a picture of it and check it out later. The other QR codes that you see on slide 20 are to join our social media channels and newsletter where we provide timely market news updates as well as views from market experts. As for my parting words, it's only the first month of 2024, but we've seen extreme volatility already. If you're feeling uncertain, well, hopefully today you have gained knowledge on a new product that could help you manage the uncertainty. If you're not confident on being long on the market in the long haul, well, there is a call warrant to trade potential upside moves. And if you're worried that the market coming off or consistently going down, there is the put warrant for you to buy and to make gains via, especially if the market pulls back. So, this product is meant for everyone. In fact, it's meant for retail investors like yourself and myself, because, again, it gives you a low capital outlay because its cost, the cost of it is really low. At the same time, it provides you leverage returns, all with your losses limited to whatever you have placed up front. I do hope that, you do find this product useful for your trading strategy in 2024. And it's a product that you're willing to try. And, let Moomoo know, let myself know how we can help you to make money via this product. And we're here for you.
Perfect. That was Jamie, everyone, head of Singapore Warrants from Macquarie. See you next time for our show together. We've got so many people typing in yes for part 2. So hopefully we'll have that soon, Jamie. See you soon.
See you. See you guys.
Thank you. Now, to the audience, as promised, if you have any more questions, type it in the comment section right now. You want to see part 2, type in part 2 again. I see so many people typing yes, and that's really, really great for us because we really are dedicated to creating more content for you for educational, so elevating your educational journey, okay? So as always, here is your chance on these live shows to be connected to experts like Jamie today. So we hope you learn as much as we learn from you, our own audience and community out there. Okay, so here is an in-app scan code, QR code for you. We've got 2 right here. The left is just my own profile page so that because a lot of you typing questions to me and what you want to see next. We're always keeping track of this. So definitely just message me personally on that Moomoo app or even tag me and I will bring it back to the teams on the next show topics just for you, okay? And the one on the right will be our social media pages where you can follow our, join our Telegram group. You can follow our pages on Instagram. We're on YouTube as well, where this live show is also being shown, or Facebook, anywhere else. We're all on there, especially TikTok too. So definitely check it out because we have a lot of variety in terms of content just for you, okay? And for this slide, it's really important. I showed this during the demo. This is the promotion that we have right now for Warrants, sponsored by Macquarie. So thank you so much. If you want to really, figure out how you can apply what you learned today, it's important that you also check this out in scanning the QR code right here. I'm just going to leave this up for about 5 seconds, okay, just for you. Now, as always, a pleasure having everyone with us. We'll see you for the next show. Once again, you're with me, Olivia Higgins. Happy investing, everyone.